Associate Principal China Market Research, now join us to discuss the economic concerns in China. Gentlemen, good morning. Liu, let me start with you.
Good morning.
It's a fifth rate cut that we have seen from November. Do you sense a bit of panic from PBOC, and do you think these rate cuts are going to work? Okay, Liu,
sorry,
if you could,
starting from me?
Yeah, Liu, the question was for you.
Okay, sure. I don't think this is a panic move. In fact, this is a part of China's overall policy easing. If you look at the real economic indicators such as PMI, and so far it has been the lowest since November 2009, and suggesting that for the first 2 months in third quarter this year, Chinese growth could be very sluggish. It's very likely that growth rate will fall to around 6.5% against a 7% growth target. So this is the reason that the PBOC has acted, and with 50 basis point triple R card that will inject liquidity of 650 billion renminbi into the banking system. It hoped that the banks will lend more to the real sector. As a result, that the high funding costs facing Chinese firms could somewhat mitigate it. And I think the other thing I would like to point out that China's economy is quite large. It's 10.4 trillion US dollar, and for such an economy to grow at around 6 to 7%, it is still a decent growth rate. So we should not be panicked at all.
Okay. Louis, two-part question on what you said. 6.5% growth estimate for the coming quarter, that's Q3. Do you think the measures which have been taken by PBOC are sufficient to push up growth from 6.5% towards their target of 7%? And secondly, the problem seems to be more structural in nature, because China is transitioning itself from a investment-led economy to a consumption-driven economy. So is it possible that the slow growth of China is going to last for a much longer period, maybe a couple of years?
Yeah, I think it's possible, as you rightly mentioned, that China is in a transition, moving from an investment-led growth to a consumption-led growth. During the transition path, there are a lot of uncertainties. So going forward, we will see a period of very sluggish growth in China. In terms of the medium-term risk we see in China, it's high leverage in the Chinese enterprise sector and also the local government sector. And both sectors have leveraged up during the last period of very rapid economic growth. Going forward, given deflation has set in, growth has declined, profitability declined sharply, it is very difficult for Chinese enterprises to use their profits to pay off the high leverage accumulated over the past. If privatization is not part of the picture, indeed, my view is that China may follow the Japanese example to experience a period of very sluggish growth after Japan's 1990 property bubble. So this is the risk I think the authorities would have to tackle seriously. It seems like the party has already decided to opt for a diversified ownership structure for China's state-owned enterprise. This means that privatization is undergoing. The problem so far is that we have not seen concrete plans as to how this mixed ownership reform can take place in the next few years.
Okay, that's an interesting point, and that's a big risk actually. James, do you agree with that view that China could now go through a period of slowdown, something similar to what Japan did multi-years back?
You could see that. You could see slower growth certainly than we've been used to. You definitely will, see below the 7% level into. But I think there are some areas fundamentally that will continue to sustain China's growth. Again, this is a difficult transition between being more production investment led towards more consumption led and increasing the level of services in the economy. But I think the good part of the story is the continuing urbanization, of China. China's a little bit above 50% urban right now, is looking to become a 70% urban population by 2030. It's adding about 20 million new urban residents every year. That's creating opportunities. That's creating growth in demand for services, for a lot of these things that will drive growth going forward, which will not be that obvious from indicators, for example, like electric power generation, as much as people have followed those indicators to follow China's growth in the past. So that is one key thing that will continue to drive the wage growth as people continue to migrate from rural areas to urban areas, and continue to continue to increase their income and consumption levels. Will still continue to be a key driver over the next 10, 20 years.
Okay. James, you look at the Chinese markets very, very closely. Post the policy action by the PBOC, how is the mood? Has it lifted investor confidence? Because the markets have reacted positively. The Shanghai index is up 3.5%.
It's fairly positive so far. Again, as we've seen over the last few days, it's a fairly volatile market. Things can go can swing up and down very quickly. But this seems to have stabilized, especially with the more positive signs we saw overnight from overseas markets, for example, in the U.S. with the Dow ticking up 1.9%. I think some confidence is returning to the market. However, you do have other investors who are probably sitting more on the sidelines or taking their money elsewhere for the time being. I think a lot of interest in real estate is coming up again, both domestically as well as increasingly overseas real estate.
Okay. Louis, just one final question. If China does go Japan's way, and considering China's importance, it contributes about 15% to the world economic output, will this protracted period of growth slowdown in China hurt, developed markets growth as well, not just emerging markets, but is it going to cause a global growth scare and therefore perhaps even put the global economy back into recession? Is that a possibility?
You'll continue. I think commodities, have definitely been hurt so far in the last couple of months. If economic growth does continue to slow, yes, that'll have an effect on worldwide commodity prices, and China is such a big part of the world economy, it can't help but impact sort of every other country in the world. However, I don't think you'll see something as dramatic as a protracted period of sluggish growth, like Mr. Liu is saying. I think there's still plenty of room within the Chinese economy for it to continue to see strong growth, and I think what you described maybe as a worst case scenario and could potentially happen, but I don't see it as likely.
Okay. Louis, do you think what's happening in China could cause a lot of ripples in global growth and maybe push us back into recession? Is that a probability or a possibility?
Yeah, I think if China were to head towards a hard landing, the impact on the rest of the world will be much bigger than before. For example, the commodity rich countries which have benefited from China's very rapid growth in the last 5 or 6 years definitely will feel a big brunt in this round of downturn. And as I mentioned, indeed, if China does not take decisive actions in addressing its high-leveraged enterprise sector and local government sector, it's very likely China's growth will stagnate And this is a worst case scenario. I think on the positive side is that if you were to read China's third plenum reform document, it was written very clearly that in the next few years, state-owned sector will have to sell down their state ownership. That means partial privatization is underway. And it hopes that they can engage in such kind of reform as soon as possible so that the stagnation in Chinese economy can be avoided.
Okay, gentlemen, thanks so much for taking the time out, both Louis as well as James, and adding perspective to this show. Have a lovely day. Time to slip into a very short break, but coming up on the other side.